Hello everyone, good evening. Well, it's evening here in Miami, so I don't know if it's morning, afternoon, whatever on your side. Anybody want to tell me if I'm connected? Can you hear me? Hello? Anybody? Okay. All right, okay. Now I got it. All right. Thank you. That way, at least, these things, computer technology, I'm not very good at that. So just want to make sure that I've been, I'm just talking and talking and nobody's here. So, that happens sometimes already. So, all right. How you all did last couple of days? Anything on yen pairs? They are the best one nowadays, huh? I remember sending out the chart of Aussie yen and telling everyone that take long on that one. And hold on just a minute. Oh man. Hello? What? Jacob, are you kidding me? Are you serious? Man, 1,000 points? You beating me badly. Oh my God. Yeah, that's what it is. If you learn and do the right thing, that happens, man. All right. Anyway, let's check out a few charts and see what happens. This is very interesting things going on. So, first of all, this chart is pound yen, a weekly chart, which first I made and sent out to everyone on January 1st, the New Year, New Year night, and we were down here somewhere, probably like around just above 140 area. And when I saw that we are breaking this high here. So, X point, and it was like X, A, B, C, and it was, I said, well, if we are going above this X point, then we are definitely going to make some kind of pattern. And the only pattern I see immediately in the making was this butterfly pattern, and calculation was 127 of XA, while other calculation were coming into, like AB is equal to C is right here. Right, FE, AB is equal to CD, 1.618% was 145.63, and then 127 of XA was 146.24. That was the highest number in this calculation. The lowest one was 145.39. So I've been longing this pair from right around here somewhere, right, and several times. But yesterday, I found an entry right after, I think before I sending out the chart on this one, and I took the entry from 5-minute chart, and as soon as I reached the first number, I got out with like almost 140, 141 pip, And that was it, because it can reverse anytime. So, but the momentum was pretty high. I was expecting that it will go probably 146, but sometime enough is enough. 140 pips, that's fine. Thank you. Thursday and the Friday we were having NFP Friday, which is kind of dangerous. So you hold on your profits, and 100 pips in profit and everything, and the next thing you know, that boom, the market takes all of it back, and I don't want that to happen. So I got out. But the point is that imagine January 1st, I made this chart, posting these. Let me see if I even have exact chart for this. And where were we at that time? Not here. Probably, yeah, this one. Okay, right there. So you see that? And as soon as we start breaking this area, this is the one, the whole chart, and all the calculation I did. And believe me or not, that's what I'm trying to teach everyone. It's not easy, but if I can do it, anybody can do it. That's the only thing I know. Okay, and nothing hard. I mean, if you know how to use the Fibonacci tool, draw your support, resistance, and trend line, that's all there is. So finally, after 31 days of a whole month, we touched our higher number. We made, how we made the high? We made 146.47, only 23 pips higher than this, and we dropped already. So this is how accurate this market is. If you understand and if you learn, you can always pinpoint. Let me read a couple of questions here. Well, to me, they're both very important. I mean, 4-hour trend lines also very powerful, daily, 4-hour, and 1 hour, all three of them. But sometimes, like 4 hours, like you can say that it's a long-term, daily or weekly is a long-term trend line. Then you have an inner trend line, or your short-term trend line, which is 4-hour, and then you have an inner trend line, which is 1 hour. So sometimes if the trade is strong, then it doesn't come out to the outer trend line. It just makes even, a new trend line inside it, and then, more inside and inner, and then inner, and then inner, if the trend is strong. So if it's the 1 hour, if it comes and hit the 1 hour and bounce, then what you do is with the trend, you just take the entries, knowing that it's, trend is up, and then you nice and clean, you take it. But if the trend is like tiring up or need a little bit more retracement, then you'll see that the price will pull back to 4-hour trend line, which is kind of outer trend line or short-term trend line. And if the trend is changing completely, then it will come down to, daily trend line or break it. Yeah, you can. What you can do is the only Jacob. The only way. I mean, the only thing that you're gonna miss is that few more extra entries. Okay, if you do if you say you are a day trader, so on a daily basis you are day trader. To me, is like you make an entry, and your entry and exit the same day. That's called a day trader within a day. And that's where a day trader, most of them use like 1 hour, 15, 5-minute entries. You make an entry, for the whole day, and then, the same day you get out. But if you go longer term, but the problem is here, not the problem. I mean, the actual reality is that, like this chart, right? It's a weekly chart. Even you're doing a day trading or a few hour trading, or maybe, hold your trade for, day or 2, 3 days, 4 days, whatever. But knowing the bigger picture is very important. In this one, you can see that when I see this, and when I made this chart, you can see these big candles, these bullish candles, powerful momentum candle. And that alone tells you that the momentum is too high, too fast, and you have very less chance of retracing, right? So the trend is, up, and it's very fast. So where the heck is going? So you do your mumbo jumbo, your calculation, harmonic and trading, Elliott wave and this and that, or you come up with a target. on a weekly chart. That's fine. But the thing is, on a target, a weekly chart from 140 to my target is 146. That's 600 points, man. And that, you know, that doesn't cover the price. The pair doesn't cover 600 points in one day, right? So you're talking about a whole week or maybe 2 week distance. Within that distance, the price will wobble. It's not going to go in a straight line, 600 points. It will go probably like 100, 150 points, then boop, 50 points dip, then again goes up. So when the price on a 1 hour chart is doing that, creating small trend lines, small different supports, resistance, temporary support resistance areas, making channels. But knowing this big picture is very helpful to understand where you're going. So in this pair, in case of this pair, we know because of this chart that, you know, our target is up there around 146. So even if it's you have a couple of days that this pair dropped like 200 points, and a lot of people will say that, oh my God, trend is changing, 200-point drop, this and that, and they will wait for a retracement on that drop and then go short, only to find out that, you know, their SL is knocked out. But what we do is that even if it drops to 200 points, 150 points, we still see it like, okay, fine, thank you. It is a retracement, and it gives you more chance to go long from all the way to the bottom, knowing the bigger picture that eventually we need to go on those higher highs. So this is how, you know, even if you do, do it day trading, just always draw your trend lines channels on from daily, 4 hour and 1 hour. At least that's what I do. And that's why I caught this yesterday. I mean, I've been catching these yen pairs all week long. I mean, for several weeks now, actually. But every day or every other day, I find a very, very nice entries for 100, 200 pips, right? Why? All these support resistance and trend lines. Simple. Let me show you this. Let me show you on pound. Okay, this was the trend line. I mean, how hard it was. We know that yen pairs were flying, for weeks and weeks now. And you know, the government is involved. The Bank of Japan is, they are, doing their best to weaken the yen. So the yen is flying high. So every time it comes and give you an opportunity, every time it dips, it's like, buying the dips. And when I saw this here, even though it was right against you can see right here, nice resistance. But with the trend, you take a chance and hoping that it will break. So that's what happens right around here. Let me show you if I have the chart for the entries. Very nice entries. See this bounce here? I had a couple of knockout here. The first bounce, then it dip again. All right. So, but I don't want to go in that. Let me show you if I have those. Okay, this was the entry, right? So I made the chart immediately. This is how, if anybody new out there know how the entry look like, this is how it is. This is a 200 EMA on a 15-minute chart, that blue line. So it's nice and easy above that, and above the 200 EMA, just above the 200 EMA, this entry came in after bouncing from the trend line. That was the key. And as soon as I found that, I took the trade, I made the chart, Aussie yen, and I sent out to everyone that, go long on euro yen, pound yen, and Aussie yen. And we all did pretty good, right? Let me see if I have another one. Right there. Okay, so this was my entry, and it never looked back. This is how this pair goes, man. So this is one other thing that the point was. Let me see. Now we are already we hit the target. The final target was 146.24. We're dropping, so I have no idea what we're gonna do. Maybe over the weekend something happens, and we get our new. Either we're gonna turn back or go up again, because the momentum is too high. Where's that chart go, man? All right, this is how it is, all right? This was the picture, isn't it? Let me show you. When I open too many things, it gets a little bit stuck here. This picture, X, A, B, C, D, right? And this is my way of playing it. Again, you should have this picture sent out to everyone, as far as I remember. This one, bearish butterfly. This we just complete that, and the way to play is again, it's like start buying from point C. Trade number 1, buy at point C. Trade number 2, buy the break of point B right here, which we did, and then we went all the way. And now this is the time. Now that's what I'm thinking. But the only problem is that the way we went there is the momentum is too high. So good thing is that we got weekend now, so everything stops right there. What's going to happen? Something maybe happen over the weekend, and then maybe yen get a little bit stronger, maybe at least a reaction as a fourth wave. Maybe I'm going to show you exactly what's happening on an Elliott wave side in a while. So this butterfly is all finished at point D, nice and clean as planned. So let's see if we start dropping. Or it's going to play out. If not, if we break this 127 level, this one, then the next level to the higher side, which will be a crab pattern, will be, you all know that, on a fib level, 1.618 or 161.8. Okay, so if we break this point now, which is the high we made, 146.24, okay, which is also 61% of the whole drop, and a couple of different calculation there, say 61% right here. Okay, from X to Y, that whole drop, there was 61% here, and then this A, B, C, D was 161.8, and then 127% of XA was the final number, 46.25, which you already hit. So we may drop from here at least to this wide band, this high, or maybe this high, or this tier. If not, if we break this, then we are going up again. We're going to watch out what's happening on the weekend, and then Monday comes, then we're probably going to go hit this high or this high. This would be maybe 1.618. What am I doing? No. Hold on just a minute. Okay. Jacob. All right, let me show you on a 5-minute chart here, if I have it. Yes, okay. And this was the entry, right? Perfect. All right. So look at this one, all right? The best entries are, that if you get a setup, especially in our time frame, right after Frankie, this is the time, let me see. This is in the U.S. session, okay, 13:55. That's in the U.S. session. So that's good, right after, U.S. session, 8:30 in the morning Eastern time, we get news and all that, and then you have a movement. So the best entries are above the 200 EMA on a 5-minute chart, which is this black line. So you can see the price was wobbling around and then went up, right? And then overall, we are in an uptrend. So going long is the best scenario against the short, right? Plus, this 200 EMA on a 5-minute chart, the price and the wave is above that. Also, we are above 1500. 200 EMA on a 15-minute chart, which is this blue line, right? So the situation was very ideal to go long. Now, if you notice my entry, which I just show you, but forget it. So I had in my entry, I was a little late. I was doing something else, and all that thing happened. And by the time I saw it, it was like 5 or 6 candles down here somewhere, right, were already made. But I saw that's a very nice scenario with a nice, the setup and everything. So I took it from here. But your question is right. Once you have this momentum bar closed, then wait for the next candle to break the high of it. Okay, that would be a solid, confirmation that you are going above that and going to make a higher high. So right around here, this where somewhere, like this bullish candle, when it's popping, that would be a nice good entry. Because this one closed down, and then we have a bearish candle, and then again bullish, bearish, like a doji, and then this is gravestone doji and all that nonsense. So you don't know, maybe it's gonna pop out. But the whole scenario, the timing, the 15-minute chart, the 200 EMA, everything was nicely aligned, and the indicator, as you can see right here, okay, the first one and the second one, everything was perfect. That's why I said, well, let me, just take a screenshot to explain everything, to everybody else. So what happened is that when you have such a solid entry, then you just take it. You just take the, go long and put your SL right around here, below the wave, below the 200 EMA. That's it. Okay, which was mine was like probably 12, 15 pips. That's all. And like our ratio, people talk about that you have like 15 pip stop loss, and then you made 140 pip. Oh, well, actually, I lost. I missed another 100 point the next day, but I was happy what I got. So this is how it is once you are with the trend on a higher time frame. If you are above the 200 EMA. If you are above the 200 EMA on a 5-minute chart and also on a 15-minute chart, that means that you are with the flow. You are not going against the stream. You are going with the flow, right? Wherever the water is flowing, you are with the water. So it's very easy to row the boat with the water, right? So that's how it is. It's when you have such a nice setup, you don't say. Now, right now we are finishing the butterfly, so now we're thinking about, what's going to happen. Let me see if we already have something that will, see, it came down here, it gave you this setup here, but the thing is, against, it came down all the way here, but then again went up there. And today is Friday, so you don't want to, trade anyway. And once the price comes in between 200 EMA on a 5-minute and 15-minute chart, it's like no man's land. Okay, gotta be very careful with that. So we are hoping for a turn. Today was Friday anyway, so all this price action, I don't want to even give you an example because, after Friday, London close, don't even bother looking at the price. Forget about that. Same thing. Now we are there, and let's just take a look on Euro Yen. Okay, this is Euro Yen doing, and this is where we are now. Okay, I don't know if you have noticed this, but this is the weekly chart again, Euro Yen. Look at that going, man. All right, so this is the area now. This is a very, very strong support area here, which might act as a resistance. This white band. You have a channel coming up right around here. This is the low, and also if you draw this trend line, you can draw different kind of trend lines just for just to feel better, should I say? But doesn't mean anything. The more tools are, the better. But the way I see it, that we may be between this white band and the small one right here, where the channel is coming. Maybe we can go easily around 129. Okay, so we are at 126.80, so almost like 127. Monday comes, and if we find nice entries, long entries, then we'll take it and try to go to 129. Why on Euro Yen I'm more inclined towards this pair? Because EUR-USD is telling us that that wants to go higher. I'm gonna get to that in a minute. So this is Euro Yen standing here. Euro Pound chart I sent out, but it didn't hold that resistance. We popped to the upside, so I'm gonna just drop that pair for now. Forget about that. EUR-USD is very interesting. It gave some nice pippage, right? When it was popping 136, I sent out the chart saying that go long, and let me go on that, and let's see if you guys still remember the Elliott waves. Okay, EUR-USD. This is a weekly chart. Again, this was also January 1st, 2013. I made this, and this is also was making similar pattern as pound yen. Very, very similar. You see X, A, B, C, and this is my calculation. This was my calculation. What is better? 200 EMA. I always use EMA on a 5-minute and 15-minute chart. Then you have a different things on a different time frame. You can choose, pick and choose or whatever. But they are like, just it's basically, if you understand with time, you will master this thing. But they are just to, it's a little help to see the direction. That's it. Like I said, if a setup is above, let's say a long setup comes above the 200 EMA on a 5-minute chart, it's much, much better than it's below 200 EMA. What happens is that you may get, if you have a nice setup on bouncing from the support, let's say, okay, that it's a very strong support and it is bouncing nicely, you find a setup, but the 200 EMA is 30-40 pips away from you, above. Then you can still take it because you want to catch that 30-40 pips. You don't want to lose that, but there's the chance that it may go up there and hit that 200 EMA and then drop again one more time. All right, and then people get scared and close the trade. So patience is always, pays out. If you wait, and then, if the turn has to happen, and then the price need to go like 100 or 200 pip, on the other side, then it will definitely go above the 200 EMA on a 5-minute chart, giving you nice setups and entries later on. So the 5-minute, or if sometimes the move is fast, it doesn't give you 5-minute setup, it goes up, then start dropping, give you a 15-minute setup. Or maybe sometimes what happens is that the price goes up, then it start coming down, and instead of giving you 5-minute setup, they just goes through that, and where they're going, they might give you a 15-minute setup. Okay, so you wait. You always use EMA on a 200-minute. 200 EMA on a 5-minute and 15-minute chart. On all the charts, I always use EMA. But a lot of people use SMA. You can use that on a daily, especially. Anyway, now EUR-USD. This is what it is. My target is still, my numbers are 38.32, which is 61% of XA, right here. And then 127 of X, this blue count X, A, B, C, D of this butterfly would be around 38.74, which is 38.32, and then another one is 37.91, which is AB is equal to CD 100%. So these are the few numbers coming in very, very close vicinity, and also the channel line is coming right around there. So this is a very magnetic area, and the thing is, another thing that I wanted to explain is that longer time, like weekly chart, and knowing that what is actually happening, like after a big drop to a certain level, then you start, you change the trend. Economies, the country's economies and big pictures doesn't change overnight or, every other day or every other week. If the scenario changes, then it stays for weeks and weeks, sometimes months, on a bigger picture. Like if China economy starts slowing down, then it will start slowing down. Maybe it stays in the same way, maybe 4, 5, 6 months, and then maybe something happens and it start turning again, right? So that gives you the bigger picture, like what's happening to yen right now. Something happened, Japanese, the government steps in, and the Bank of Japan and all that, and then yen start dropping big time. So now it's several weeks. It just keep doing that, right? And their economy or whatever. So things changes, and now all those crosses are going high, but they drop once in a while going up on a bigger picture. They drop once in a while, like 150, 200 pips. That doesn't mean that the trend is changing. Why that happen is profit taking, and sometimes we have something else called economic calendar, where on a daily basis we have different newses, different events, different numbers coming out. Like today we had NFP, right? And similar, if you have FOMC and then CPI numbers and this and that, interest rate changes, bond sales and all that, right? So they, on a daily basis, whenever these numbers comes out, people react. Okay, and that's why we have wobbling going on, up and down, up and down. But overall, knowing this weekly chart, you know that overall we are going slowly to the upside because the whole picture, the stock market, everything is going up and up and up. So a certain level like this one. And every time the price drop, a dip, then what you do is you just try to buy it. If you want to be aggressive, you can use the dip as well, knowing that there's a resistance and it's going to stop the price, and probably price going to drop maybe 60, 70, 100 pip, and you want a piece of it, then it's fine. Sometimes profit taking, sometimes, basically it's a profit taking, like somebody, if people go long, they put their limit on a resistance. So as soon as the price hit there, their trades are off, right? Close, and that makes the price, a little dip. And sometimes economic calendars do the job. Okay, price dip, but then again, start going up with the trend, with the major, bigger economy wise. So this is the scenario here, EUR-USD. This is the first chart, and then what happened after that? Today we are here, right? So very nice and clean, we were going up, and I sent this chart so many times in the meantime to everyone that we are going up. We had a nice big dip here and going up. Now, the only problem is that when you're looking at the weekly chart, then you can never tell that what is happening on a daily basis. One candle represents the whole week. So this week, let's say this bullish candle showing that the weekly we went up 300 pips. But maybe Monday, Tuesday we went up. Wednesday, Thursday we dropped big time, and then Friday we went up big time again. So those small swings, if you want to see those swings and catch those swings, then you have to watch the smaller time frame. And that's why, let's see, I had this chart. If you remember, this was the 3rd of January. And this one is a little bit of Elliott wave counts. Anybody has this chart? I remember I sent out to everyone. This is XA, this is B, C, and we are going for the D on weekly butterfly. But on a daily basis, I saw this that I can count Elliott wave, and this is how they come out: A, B, C, D. Let me refresh. You still remember Elliott wave? Anybody? Anybody has any idea? Okay, this is how it is, right? Let me just refresh a little bit. You have 5 waves going up and then 3 waves coming down. All right, so 5 waves, like 1, 2, 3, 4, 5. Out of these 5 waves, like the wave 1, 3, and 5 are impulse wave, and then 2 and 4 are corrective. And all of these, each of these impulse wave also have subwaves, 5 subwaves in it. Let's say this wave 1, the black count, this wave 1 has also, like, these blue Roman counts of 1, 2, 3, 4, 5 small subwaves makes 1. Wave 1, then A, B, C correction. Wave 2 makes a kind of head and shoulder, okay? And then again, the wave 1, 2, this is 1. Oh, sorry, miswriting. They're supposedly 3 instead of 1. Anyway, so again, the wave 3 is the biggest one and also have like subwaves, right? 1, 2, 3, 4, 5. Then makes 3. Wave 3, then you have again similar to wave 2, you have A, B, C correction as wave 4. And then again, wave 5 usually is equal to wave 1 and is smaller than wave 3. So that's the whole thing makes another wave 1 on a higher time frame. Then you have a correction for that, all right? And all this, wave 5 waves makes wave A, then B, then C, and all that. So I just want to give you a brief idea. Now, the main thing is I want to ask you guys that anybody remember what is the calculation of wave 3? Anybody? Tony, Tom, Jacob, anybody? Pat, Bella, anybody? Rod, are you there today? I don't think too many people are logged in today. Friday night, right? All right, Jacob, you're right on the dot, bro. Beautiful. 1.618, right? Okay, but did you notice anything, something like that in EUR-USD lately? Okay, all right. All right, so let me show it. Yeah, this is wave 3 is 1.618 of wave 1. All right, here's the calculation. This is a wave 1, 2, 3, and then wave 4, side wave, ABC correction, and then wave 5, right? And wave 3 is equal to 161.8%, or 1.618, same thing, percent of wave 1. Okay, wave 1 is this. So you use that tool, the Fibonacci extension tool, 1, 2, 3, these points, to measure wave 3. If it is 1.618, then it is a wave 3. It will be followed by wave 4 and 5. But if this wave 3 is this one, it ends up at 1.27% of wave 1, and then start dropping, then that wave is not going to be wave 3, that will be wave C, right? And then we will, think that, okay, it's going to have a big drop now because that correction ABC is finished. But if it is 1.618, then you have to think that, it is not finished yet. This is a third wave, and then we will be having fourth wave, and then fifth wave will follow. So now what's EUR-USD is doing here, let me go back. Notice this chart here. I had this one first, right? So 1, 2, the black count, and then Roman count showing the third wave, 1, 2, then 3, 4, 5 will finish the third wave of this black, solid count, right? And the prices start moving from there. And now look at this here, this picture. If this is wave 1 and 2, and then this Roman count 1, 2, and we needed a wave 3, and then 4, and then 5. So when you use this tool here, this point A, point B, point C, this wave 1 and then wave 2, and then now you can see right here this tool that we went and touched this 1.618 exactly. We made 136, I think 137.08 or something, and this 1.618 coming at 136.95. So you see, this was the target when we start going up from there. And then in the last webinar, I showed this triangle here and telling you that we're gonna break this triangle to the upside, and that's what we did, and we finish up this wave 3, 1.618. So now we have like 1, 2, and then 1, 2, 3 Roman counts, 1, 2, 3, and then if that is the count and that is the calculation that we are going for, then now we need wave 4, either in a small triangle like this one, a ranging condition will follow, or maybe just a flat correction, ABC, 38% of wave 3. So let's say if we can go and measure that. Okay, the triangle in wave 2. Normally, the triangles are in wave 4, almost more than 90% of the time. Very, very few times that you have wave 2 triangle. And let me go back again and try to see which one you're telling me. We were having the triangle like in the middle of the wave 3, right? Where I could go right here, this one, right? So yes, you can say it's this is that's what it is. I mean, it's not exactly perfect like wave three, 1, 2, 3, 4, 5, but it is just like it's 1, 2, and then the calculation it is giving us like 1.618. But if you see this from the advance from here to here, it is in 3 waves. So it's kind of strange, and that's why I tell you always that don't think that either harmonic patterns or Elliott wave, and like a lot of people tell you that if it is not exact calculation, don't trade. No, I don't. I disagree with that completely. And we all have a little bit of brain, right? So we need to use that. And Elliott was just another trader, just like us. Okay, and he saw some things that happens, and he just gave us the idea that this is usually happens. But that usually doesn't mean that always. Okay, if it's as long as you have the calculation, just follow, and then if you have your setups coming in and giving you that, if you make an entry here somewhere, and you said, okay, wave 3 calls for 1.618, and you travel all this distance with the wave, and then you get out here. I don't care about what kind of shape is that, as long as it is a 1.618. I made some pips. That's it. Just like pound yen, as soon as I hit my first number, I got out. It went up again, like 120 points more. I don't care. Oh, okay. Wave 2 usually is not. It usually is a flat or zigzag. Wave 2 always is like a small zigzag, like this one right here. Wave 2 or wave B. So like let's say this one, this big movement, you can see this is A, then B is small A, B, C, next to wave B, and then wave C is 127%. Yes, you're right. Yeah, 127 most of the time of this. And if you place, let me go and show you on a real, so I can draw the tool. Man, why is this thing is doing that to me? Oh no, my chart has just disappeared, man. Anyway, I don't know where it go. Let's measure this. Let's say wave A, B, and let's see how much is the C, right? Okay, I'll place this here. And you see the C comes exactly to the pip, touches 127%. All right, so when you have a correction as wave 2 or wave B, then you have A, B, C, and C is usually 127%. So that's how you tell that it is not an impulse wave. It's not going. It's not a third wave. It's just a correction, and it's a C wave. As soon as that price bounce from 127 and start going the other way, then you will say, oh, okay, it's just a correction. It's not gonna go down anymore. It is gonna, the previous trend is gonna be intact, and you start looking for upside. So now we have 1, 2, and then again the same thing happens. That obviously is like a 1, 2 of wave 3, the bigger picture. Okay, so yeah, you're right. That's wave C is 127%. AB is equal to CD. And it could be impulse wave. C can have 5 waves, right? The whole thing would be, you can say flat or zigzag. But C wave, most of the time is impulse and have 5 waves in it. So like 1, 2, 3, 4, 5. C, characteristic of C. And, of course, you have more detail, but I don't want to get into that, right now. It's going to get confusion. So right now we are sitting at exactly 1.618. So let's say if now we need wave 4. If we doesn't go above this, then we're going to come back down, and we need 38% of wave 3, which is from here to here. So let's measure that and see what is the possibility for next week. So 38% is coming right around here, if you can see that this trend line there, and 38% is cutting it here, and we have a little wobble here as well, right? So remove this one. This is a small one. We're probably going to break this. And then most likely we probably have like a small wobbling around, channeling or ranging, and then come down here somewhere. Maybe only 23%, maybe 38%. But by the book, we need the calculation. Our calculation says that 38% wave 4. We finish as wave 3 of this Roman count with 1, 2, 3, and then let's see if we get 4 right around here, and then hit this trend line maybe, and then continue going up to my final target would be 127. Minus 127 is here, like 30, 38, 70, 39 area. That would be the final target. And if we calculate another way, wave 3 of this, wave 1 and 2, that is way above 0.618, I guess, right? Okay, so for even if you use 1 and 2, wave 1 and 2, so you can see that 1.618 coming right here. So either way, if you use this 1, 2, 1, 2, 1.618 is coming exactly where we are now. So strong chances that we're going to start retracing from there, coming down a little bit, 38% of this wave 3, and then start going up. And, probably right around here. We may go above 138.70, but, doesn't matter. Right now, our calculation is on the weekly chart. We need 38.74 is my top number right here. Okay, so that's where we are going. So now you know that we finished the wave 3rd. We're probably going to drop a little bit for wave 4, 38%. And then from there, go up again to 38.75. 38% of that. I have done all this homework, but I'm doing in front of you so that you can understand that what the heck I do. No. All right, so 38% is 34.39. Okay, so 34.30, 34.40, right? Now, if you go on a weekly chart and see 34.40 where it is coming, 34.70 is at, no, 34.90 and 34.40. This high is 34.84, so just below that, 34.40. What number do I have there? 33 is my bigger number, 34.40. Well, let's see what happens. I have no SNR number in that vicinity, but I don't even know if we're gonna drop or go above. But these are the numbers. These are the calculation. These like harmonic patterns, Elliott wave calculation, and all that. These are just like preset. What's the that's my buddy Mogambo. That's an indicator. It's a sort of momentum indicator that shows it's just again all these indicators are same, just a little mumbo jumbo here there, showing overbought oversold conditions. That's all. So it's just an extra. I'm trying to use this this indicator. I'm trying to make it perfect for a 1 minute scalping strategy, basically. But it is giving me some nice, decent, but sometimes it stays like a overbought or oversold condition for days and days, and it's just it's a lagging indicator, so it's not it's not important. The one we are using, just stick to that. That's it. That other indicator that I have for divergence, that's important. That's why on a 1 hour chart only, though. Use that on only 1 hour chart. Okay. So with Elliott wave a little bit here, what's happening, you know, and then pound yen, euro yen, they are all reaching to their top. EUR-USD has reached to the top, and pound, I was expecting something else, but it did something completely different. So I'm like confused now what to expect from this pair. But let me show you just an idea. As soon as I find, you know, something confirmed, then I'll set out the chart. This is what's happening in pound. It's also a weekly chart, by the way. I have not prepared that. But look at this trend line here, connecting these 2 points, going straight. A bounce was here, and then up above this white band is 163 area. Okay, so 163 stopped it, and the bottom we are at 157 now. And if you connect these two, you have a blue line. If you connect this point to this low, you have this yellow line, and we are a little bit above this yellow line, and this yellow line probably will stop it at around 56. So 100 more point it may drop, and then we can expect a nice bounce from there. Okay, so we will I will watch it very closely, and now you know what I'm watching, so you can watch it as well, right around here. Okay, so it's gonna have a nice big bounce. We had a bounce from this blue line, which you can see here. You see that? All right, this black line is the blue line on the chart. Same thing, but we bounced a little bit, but then boom, I don't know what the heck happened, but it dropped big time here, right? But it's still above this high, above this low we made. So God knows, we might, you know, hold here and then go back up again. This sort of like 1, 2, 3, and then 4, or maybe 4 is in the way. It's like A, B, and then another leg up to make A, B, C as a wave 4, and then drop again. God knows. So it's not clear. This could be, the way I see it's like A, B, C correction. All right. So this A, B, C correction. So let's see what happens. And but at least EUR-USD, we are expecting something decent there. And pound yen, Aussie yen, I will do some homework and then send you the charts. So right now I'm concentrating on these few pairs. Frankie is acting very weird. Frankie means Swissy. Okay, it's acting very, very weird. The correlation between the inverse correlation, should I say, between that Swissy and this fiber EUR-USD is gone. Okay, they are both going up and both coming down. God knows what's happening. So I don't want to bother with that for now. And if I see something, concrete and that I can, share with you guys, then I'll immediately make the chart and set it out. All right. So now at least the EUR-USD is our main pair right now. We finished wave 3 yesterday. Anybody made any long entries on EUR-USD yesterday? I sent out the chart telling you that we are breaking 36. We need to go long to 38. Should be very easy. Okay, good. Yeah, so we went up. A lot of people were talking about the target 35.50, which we already reached. We broke that. We broke 36. We went above 37. So that alone telling me that we might be coming down, maybe 36, drop a little bit, and or 38% of that wave 3 somewhere. At that, go back again to 38, 50, 39 area. Okay, so we have something to work with. Pound yen, like I said, if it drops, it drops. If not, if it start going up again, just take the long entries because yen is getting weaker big time, and we might go to 1.618 instead of staying 1.7. So this is it for now. A little bit of harmonic pattern, a little bit of Elliott wave. And again, remember the entry that I show you, just follow those rules. That's all. Pound yen. I don't know if that guy. Oh, yeah. Okay, I got an email from this guy. He really wanted to attend this and learn, about the entry, but he had to go someplace. So I'm gonna just send him the recording. Anyway, so any other question, anybody? Anything you need a clarification or anything? Even outside the webinar, whatever the question comes, or if you want to know anything about any pair or any analysis, just send me an email, okay? I will. I'll most of the time I have things ready. I'm keep doing these analysis and all that, so I can just send it to you. All right. So I'm very glad about the pound yen pair. That it's not that I'm proud or anything, but on January 1st I made the target and telling that we're gonna reach 146.24, and guess what? We touched 146.47. Amazing, huh? All right, so that's the power of it's nothing, it's not me. It's just the power of this Fibonacci tool and all this learning, these patterns and Elliott wave. So if you learn that, you can always, you can all predict like that. And the best thing is that if you have a longer period time frame targets like that, you can always just nimble, again, little by little. Every day, just get in, get out, make your 50, 60 pips. And believe me or not, once you are perfect and you know how to hit and take just only, above or below 200 EMA long or short on a 5-minute chart, and make your 40 and 50 pips, all you got to do is increase your position to make thousands of dollars every day. You don't need 100 pips or 200 pip run. Build your confidence, your expertise on that system, this bouncing, from key level, and that's it. You start increasing your position. That's all. And Jacob, when you're making 1,000 pips a week like that, man, I don't know what you're doing. My God, that's too much. I never made it. Sometimes, very few times, man. I went above 1,000 a week. Very, very few times. 500, 600, I can understand. And usually nowadays, if I'm like 400, 500, I just stop, do something else, like the other day, 140 pips on pound yen. I closed the trade. I was happy. That's it. I knew 100, very, very strong feeling that it will go to, because that was my number, 146 something. Pat, EUR-USD, like I just explained, that we are, let me show you again, that it's not a rebound. It's in an Elliott wave perspective. We just finished the third wave, and we are expecting a fourth wave down to 38% of the third wave. So we are like 1, 2, 3, and then fourth wave, maybe around this area here, 34.50, let's say, somewhere there. Okay, 34.50, 35 area maybe. This is also a very strong, see this area here, this white area? Maybe this will stop it. So maybe we'll drop up to here, maybe 34.80 again, 34.50 to 35. Somewhere there we're going to drop down and then go back up again. Where we are going to this area, okay, 37.91. Then we have this number is 38.74. And see this low here, this is the key. Maybe they are shooting for that. This is 38.34, and which is also 61%, 61.8% of this whole drop is 38.32. So all these three numbers, just like what happened in pound yen, I had the solid thing set up there, and we hit the number, right? So EUR-USD probably gonna go and do the same thing. So yes. Next week in the beginning, we probably will start slow ranging, like a pull back a little bit for 38% for fourth wave. And then from there, we're probably going to go up again. Okay. I use your accent system. Yeah, Jacob, this system is just, same indicator and everything. As long as you are using MT4, I don't even know about the other platforms, but, I use MT4 all my life. As long as you are there, I mean, these common sense, common indicators, man. You know, it's not even a system. It's just understanding, man. You use this, you use it anywhere in any platform, and you will get the same results. Okay. Just be aware of these trend lines and bounces. That's all. As soon as you see a bounce or expecting a bounce, watch that area very closely. And if the turn has to happen, then you will have a 5-minute or 15-minute setup. Definitely. Just take that setup and that's it. Sometimes, a few times that, the price are, a drastic turn is a big bounce, then it gives, just, take off without giving you the setup. And in that case, you'll just want to I nibble a little bit, few pips here there on a euro yen from a 1-minute chart. It gives you, good entries. When it's a fast move on 1-minute chart, gives you nice good entries to get in, and then pick up like 20 here, 30 there, something like that. So yeah, in a fast move like that, you can always use 1-minute entries. But it's very easy. Like I just show you on a pound yen entry, my entry. Nice, clean entry there. Where it is? Let me show you again. No, not that one. Was it? Yeah. What happened here, man? Where'd it go? Yeah, see this one. Nice and clean, right? No hanky-panky. Look at this. This is how the classic entry is. That's why it was so perfect that I took a screenshot just to show everybody that if always remember on a 5-minute chart, this is a 5-minute chart, 5-minute entry, my ideal, right? And this is a 600 EMA on a 5-minute chart that represent a 200 EMA on a 15-minute chart, right? So now I know that we are above 200 EMA on a 15-minute chart without going or looking at the 15-minute chart. So it's easy to, say. So now the trend is nicely up. We are holding above that. And then price is wobbling around 200 EMA on a 5-minute chart. This black line here. Okay, so up and down. See, a drop and never gave you a long setup. A drop here all the way. It gives you a short setup, but, above 1500 EMA and above the, trend line bounce. So I wasn't looking for short anyway. I was thinking and seeing and watching that if I can get a long entry, knowing that yen is weaker and weaker. And after that, once you see something like that, how can you resist? You are expecting a long entry. It's a perfect, by the book, going above the wave, coming into it, giving nice bullish candle right above, from the middle line of the wave, which is a 200 EMA on a 1-minute chart, by the way. It was a perfect entry. So if you have these kind of entries, maybe like 2 or 3 in a whole week, you will come out with 200, 250 pips a week. Believe me or not. Easily. So a lot of people just wish for that. So look for this. A master of this thing. Just become a master of this. 15-minute, above the 15-minute, 200 EMA, above the 5-minute 200 EMA, the price goes above the wave, gives you a setup. And if it is a support and resistance bounce or a trend line bounce, or you're one of those harmonic pattern, and you are with the higher time frame trend, with that trend. Like if you're taking a 5-minute entry, so make sure that on 1 hour, 4 hour daily, the trend is up. If you're taking a long 5-minute entry. So, and it can't go wrong. Even if you go wrong one time, see if you can find another one. Sometimes what happens is the price goes up and boom, it comes down on you. Take out the SL. Fine. 15 pips lost, that's fine. Thank you very much. Wait for that. It will go up again and give you another setup. That happens only once, maybe twice. That's it. But then you get another setup, take that, and it will give you 100, 150, nice and clean. Cover everything. All right. So thanks for coming and watching and being with me. And we will continue our journey in 2013. Everybody wants to know that this guy named Mr. Jacob telling me that he made 1,000 pips last week. Okay, and this is it's amazing. And if he can do it, I can do it, and you all can do it. Believe me or not. All right. So just practice and remember this setup. And if you want, I can send you this chart, print it and put it on your site. I have thousands of entries, but, just I took this entry just to show you all, because it's like a perfect entry. Very, very nice entry. And the result was, after this entry, look at the result. This is what I call is like a fishing hook. Okay, it's a fishing hook. If you anybody fishing, interested in fishing, it's exactly look like that. All of my previous videos, you'll see that I always talk about fishing hook. Look for this fishing hook into the wave and then comes up. That's it. That's all there is. And look how nice it is going. All right. So soon I will send out. I'll upload this on my website, so you can go back and take a look. And targeting pound is coming down, but very close to this weekly TL. So we are expecting a bounce there. Pound yen probably gonna drop or go up. Either way, we will see. Yen pairs are weak, very weak. So I don't know. But EUR-USD, yes, very, very solid. Elliott wave count going in there. We will wait for the fourth wave pullback, 38% of that last advance, and then you can try to go short a little bit for 30, 40, pips pickup, and then from there go heavy on once we start the fifth wave. I will notify all of you when the fifth wave starts to the upside, targeting like 30, 38, 50, 39 area. All right. So have a very, very pleasant and enjoyable and very happy weekend. You all enjoy, and let me go. And everybody, my kids are sitting outside waiting for me to go out. So I'm gonna have to go spend some money on them too. All right. So thank you very much. Talk to you guys soon.